All right, let's jump right into it. It is Tuesday, March 19th. We're about halfway through the month at this point. So we'll do what we always do and zoom out. I do have the OPEX chart open here, and this shows us that last week's close, right, of that OPEX level, which was that 51.82. You can see we're trading 51.99 here, just a little bit above that level. You can see so far this OPEX is trading above that OPEX plus 4, which is at 51.82, and that's going to be a level that we want to continue to monitor, as a break of that level will kind of give us a break of trend, and just a decently important level to pay attention to. Now on the monthly, our next plus 4 level below is going to be that 51.03. Now remember, these are a little bit off just because of how they get adjusted for the contract changes, right? So just be kind of aware, but just, be paying attention. If we do get close to that previous month's range, which that high was 51.23 quarter, a level that you guys can all probably remember, it will be something that you want to be paying attention to, because if we do enter the previous month's range after a plus 4 month, there is higher probabilities of liquidation, which could mean increased range, or in this case, should the market get back inside the previous month's range, we could see increased volatility to the downside. Now, switching over here to the weekly, we can see, like we talked about, this is kind of an interesting week because the contract rollover really kind of messes things up. So what I've been doing is just been scrolling over to the SPX, and you can see on the SPX on the weekly, we kind of had this inside week last week, and so far we're still inside this previous week's range. Probably create an alert here. What was that high? 51.79.87. And just monitor the previous high and low on the SPX, because that can tell you if we do get a break from either side, then there is decent opportunity for continuation in either direction, right? Either continuation to make an all-time high, as last week, basically hit the previous high, very weak kind of look on a weekly level, or continuation to the downside should we break the low down towards like this 9 or 21 EMA, back down into this lower balance and a break from trend. And you can see sometimes, and this is where a lot of people get confused with trend lines. I know trend lines are great, and I'm not ragging on trend lines at all, but one thing you've got to understand about trend lines is they can be broken two ways, right? And this is something that I learned from Peter Reznicek over at Shadow Trader, is that they can be broken with time or they can be broken with direction. And in this case, it doesn't really look like the trend line here is getting broken by anything but time, right? You can see we were kind of going up. Now I've moved it over, but really it's not that the market's coming down. It's just the market's not continuing the trend up. So it gets old and starts to trade sideways. Switching back over here to the ES, we'll jump over here to the daily. We could see yesterday a nice +4 day. It was a kind of interesting +4 day, and we've been seeing these a little bit more frequently lately, where we have a close lower than the open, but still everything is above the previous day's still above the previous day's levels, right? So we moved up, or we opened up higher yesterday. We actually moved up initially, caught a decent long early on, but then the market for the most part rolled over, traded sideways actually for the most part yesterday, and then we had a late day liquidation into the close, which we'll take a deeper look at on the profile here. Another thing I do want to take a peek at here while we're sitting on a daily chart is if we look at our S&P 500 50 moving average, right? So all of the stocks above or below the 50 moving average, we're sitting at about 70% as of yesterday's close. About 70% of the stocks in the S&P 500 are either at or above their 50 SMA. So indicating a little bit of strength here, but we can see in the past how this typically normally goes. You get things get a little bit too strong, then they've got to come down. They get a little bit too strong, then they've got to come down. A little bit too strong. So it's not really an exact rhyme or reason or pattern that you can draw just from this chart and kind of apply it directly to your trading, but it can give you a little bit of insight in the breadth or the the strength that's in the market, or what the overall market is doing, right? So it's definitely something I like to look at. If you don't look at this, or if you don't have access to it, it is on TradingView, but you can go to FinViz, which is a website that's free. Click on the maps, and I like to look at either like the 1 month performance. So you can see in the S&P in the last month, right? Some of our weaker players, Tesla down 13%, Apple's a big player, right? Down 5%, UNH a big player, down about 6%. But for the most part, a pretty mixed bag. You could look at the weekly, right? Weekly, you can see a little bit more red, as last week really wasn't much of a strong week. And then I like to look at the year-to-date performance. So how are we doing year-to-date? Well, Tesla, not great. Apple, not great, down about 10%. Intel, down about 15%. But you look at NVIDIA, you look at AMD, you look at Microsoft, look at Meta, look at Lilly, right? Some of these stocks, look at Netflix, Disney, Berkshire Hathaway back at all-time high, JP Morgan, you can see financial services doing well. Still doing well for the year. So like I said yesterday, this is not a time where I think you want to get overly bearish and just start selling the farm. But this is, look at Boeing, right? Boeing getting beat up pretty bad off of some news. It is a time where you want to be kind of, oh, what the, I don't think this, oh, now it's working again. Okay. Where you want to be kind of paying attention to the overall market and see where the rotations are going. It's going to give you some opportunity. So even if we do get a continued pullback, well, where is it likely to come from? Well, probably from some of these stocks that got a lot of cream on the top, right? Is Tesla going to continue to get beat down trading 173? Probably, right? It got beat down while the market rallied, but is Apple going to continue to get beat down while the rest of the market, if the rest of the market goes down, or do they want more of a soft landing? And this is something I talked about a couple of weeks ago. So let's say they take Nvidia and they're like, all right, we need to sell some Nvidia, so we need to, and I'm sure these dealers have some Nvidia long stock that they would love to unload, or that they might need to unload. The options are pricing in about a 10% move here on Nvidia anyways, for this week, either up or down. There's someone's running a caller. But let's say they start selling off Nvidia, selling off some Microsoft. Well, where are they going to put that money? Well, energy might be a decent spot, right? As energy stocks tend to be a nice risk off asset and typically tend to never go anywhere, or into some of these beat down stocks that are still high alpha stocks that can still make some good money, like Apple, Adobe, Intel, right? So just something to think about and kind of pay attention to as we continue to move. Now, switching over here to the profiles, a little bit of a review from yesterday, right? We opened up on this gap. You can see, and it looks like we're going to be opening back below it. So we're going to have kind of this double gap. We've seen this happen before, but we opened up on this gap. Market opened. Open was like 25 here, basically like right here at this point of control. Traded higher, came back down, basically to the open, traded sideways for the better part of the day, got a poor low, fixed it, traded back to the high after fixing it, traded back to the low, so really kind of back and forth. And then, like I said, end of the day liquidation. And then the settle, which I didn't grab yet, was our settle was 52.14.75. which makes our life pretty easy today, right? One, we finished on a spike to the downside, so we want to go in the direction of the spike, opening below it. Kind of says these lower prices are accepted, but this was a +4 day also. So on a +4 day, we know that we do not want to be long below the settle. So that makes our life pretty easy until we get above the settle. We definitely don't want to be looking for any longs. So we can basically just put this here, be looking to trade back towards that point of control, which is, like I said, basically yesterday's open, 25. If we get above that 1475, then there's a decent opportunity to trade back up there. And you can see this larger distribution from like 42.41 to 42.08. That would be kind of in. You can see we're trading kind of in this unfair low. And so really, I do want to be paying attention to this previous day's high big time today. And I think a fail to really get acceptance above that previous day's high and to kind of hold this gap gives us nice opportunity to trade back down to the 82. So about a 20-point-ish trade kind of setting up for us here. Of course, there's some levels below. Really kind of have to see how they act when they get there. And then I do think that there is some opportunity if we do get above that level and we can't close the gap off of that overnight point of control, which is a very wide and prominent point of control. Overnight inventory is 100% net short. The odds of us visiting that overnight point of control are very high. So, if we can't hold inside or under this 201.75, that's probably where we're going to be going towards that 8 level. A nice sell off that 8 back into this 5200 is probably going to be the ticket. And then a breakdown of that 5200, right? You start looking towards that 87, 88 level. So still a nice 20, 30 point opportunity to the downside should the market pick up. Now it is the day before the FOMC. And so I'm not expecting too much just because like I said, it is the day before the FOMC. And so what can we probably expect? Maybe some people shoring up positions. I know a lot of people were watching the Japan meeting yesterday. I haven't caught up with it yet. I don't know if they raised or hiked. I did see something saying that they're not going to continue raising, or they're not going to raise for the rest of the year. So that can be a little bit bullish, right? Even if they're not cutting, not raising is still higher. What I do want to kind of put in everyone's perspective, or at least get you thinking, is like, okay, when Powell comes out tomorrow, even if he does make a cut or say that there's going to be a cut in the May meeting, the market could rally from here, right? Market could rally, and that doesn't necessarily mean that it's not going to go down, right? So for those of you guys that are really attached to this bearish bias and, I don't know why, right? And that's why I'm zooming out the chart all the way back to, the beginning of the year. You can see we've pretty much just gone straight up. Not that we can't go down, but right, let the market kind of dictate what it's doing and telling you. Of course, we're only intraday trading here. That's why we don't want to let our longer term bias affect our intraday trading, right? Like yesterday, maybe some people that had been looking for the short side, trying to fade against that gap yesterday, stayed short early, got stuck, got ripped up, got their stops taken out. Once old business was taken care of, the market kind of balanced. You could see sellers were really weak yesterday. But for the most part, yesterday was just kind of a chop. But really, I mean, you look at the market, and the market doesn't look super weak. But we are putting this kind of gap on gap here. This is what a technician would call the old island top reversal. Let me switch back to green here. Right, it's kind of a candlestick pattern. If you haven't heard of it, you're probably better off just not even looking it up. But basically, you get a gap, market trades, holds the upside, and then we get another gap to the low back inside this previous day's range, and then this gap kind of holds. So there's stuck inventory, and it's all weaker inventory, which can cause this kind of increased liquidation. and will act as resistance until we get back up until that level. The odds of value forming lower today are higher, of course, unless we get above this settle, and then we want to, obviously be careful with any shorts above the settle. We typically like to look for a break inside value and to start fading it lower. I still think that maybe there's that opportunity there, but I think with this overnight inventory 100% net short, you've got to be very careful if we get above the settle, fading that gap, because the sellers, like I said, put in a lot of work yesterday to get the market not that much lower. And with the Fed tomorrow, they may be just looking at Globex saying, you know what, victory is victory. I'm just going to start covering my position. So they take it back up. Hey, Juan, thank you. But yeah, other than that, that is pretty much it. I don't expect too much from today. Tomorrow should be a nice, exciting day. And then that is pretty much it. Oh, one thing I did want to bring up is I was listening to Jim Carson, and he was saying that back in the 80s, the energy sector, which we can see here, is only taking up about like less than 4% of the total S&P 500 right now, was actually 30% back in the 80s. So that's something that we can definitely see, right? Tech is 30% right now almost. Well, if we start to see some rotation, and that's what I was talking about a little while ago, where you see the rotation where they don't want this market to just crash by selling everything, but they do this rotation, and that kind of gives us this kind of push and pull. And what that does, in my eyes, is really trap and wash some of the weaker hands in the market, some of the people that are really addicted to price and just looking for that back and forth. Market goes up, they're like, oh my God, it's going to go up to the all-time high. It goes down a little bit, like, oh my God, it's going to go down, right? We all have heard of these people and seen these people, and we'll never stop because it's human nature. So, just be cognizant of that. I think that they're trying to bring that market into kind of like this soft landing, but I do think that there is some opportunity here as the market starts to come down, anywhere from about 3 to 10%. Really, you can be looking for like a longer term buy. And you can see down here 50.85 is still where that volume point of control is at, and where that bigger gap from the 22nd was at. Of course, the contract's adjusted a little bit here, so the gap's going to be a little bit lower, but you get what I mean. And that's where all that volume was at. But yeah, other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.